How would businesses take advantage of whole life insurance?
The primary way businesses take advantage of whole life insurance is as a low-risk investment. So, depending on the business, if it's a more mature business, they probably have a bunch of cash that is sitting on their balance sheet, and that cash is probably earning 1%, maybe 2%. If it's sitting in a GIC, it could be earning 4% potentially at today's interest rate levels. However, you pay 50% of that basically in tax to the CRA. So your 4% return goes down to 2%. So business owners will take the money that they have that's already sitting in that low risk bucket, and they'll put it into a whole life insurance plan. The first benefit is now they can potentially get up to 5% of a return, depending on their situation and many other factors. That 5% return is tax advantage, so they're not paying tax on that money to the CRA. So they're immediately going to bump up their return. They're going to have the same guarantees as well, and then they're going to have access to that cash through lending facilities, lines of credit. The business also is going to have a life insurance policy now on the owner of the business. So when the business owner passes away, there's going to be succession issues, taxation issues, and that life insurance plan now is going to give a tax repayment to the business. So you're getting a better return than you would have been getting anyways, plus you get the life insurance, plus you get a pre-approved lending facility. So you get 3 advantages over what you are already receiving. This is not money that you don't have. We're simply using the assets that you already have as a business owner, and we're redeploying those assets into something that's better.
This almost sounds too good to be true. You're telling me, as a small business, I may have $200,000 in our corporate account, and currently it's generating 4% on a guaranteed GIC. So you're telling me that business could purchase a whole life insurance policy for that same $200,000. And A, you mentioned that the owners of the business would immediately get that death benefit. B, they would immediately bump up the rate of return to say 5%. C, they're going to enjoy an immediate tax advantage because there's no tax that is enjoyed in the growth within the policy. Anything else that I'm missing?
The policy also comes with pre-approved loans and lines of credits. So if you have money sitting at the bank earning 4% in a GIC, the bank's not automatically giving you a loan or a line of credit against that money. You have to apply for a separate loan or a line of credit. That's not the case with the whole life insurance policy. It comes with pre-approved lending facilities. So you can also borrow against those funds and have $1 work twice for you. You get the return inside the policy, and then you can borrow funds against that cash and invest those funds somewhere else and earn a return there as well. So you're getting $1 to work twice as hard for you.
So then D, there is the ability for the business to then borrow against that hypothetical $200,000 and invest that $200,000 into another asset, equipment, property, etc., and still enjoy the growth of the principal of $200,000 in perpetuity. Did I get that correct?
You got it.